Okay, folks, welcome to Thursday Night Stock Charts Live. And what we're going to go over tonight are the weekly charts. We'll review how we're setting up to close out the week, and we'll take some chart requests. This is going to be an open mic night for you members, and I'll answer any questions you have with regard to symbols, questions with regard to our positions, and then at the end, we'll talk about our positions, and let's get to it. So today is what I believe was the beginning of a sell-off in this market. The only fly in the ointment on a weekly basis are the shares of the small caps, the IWM. Now we'll take a look at that chart. Precious metals appear to be very, very strong. The stars are in alignment for them to go higher. And when we take a look at the bond market, these are all going to be weekly charts. The bond market, this is the yield curve. We have some serious problems here. These are the 2s versus 10s. So a much higher level of danger. And we are yet again seeing a near inversion of the yield curve. We're only a couple of steps away, a couple of bips away from again inverting yet again for the second time since August. And it's the double bottom. That's when you have to worry. We double bottom out and we begin to steepen on the yield curve, just like we did back here and back here during the bubbles when they popped. And you saw the S&P 500 get hammered. Overlaid here in blue is the S&P 500. It got hammered. Back here in 2000, S&P got hammered. So we have now put in a new monthly low on the yield curve. Not good. Now, in terms of bond prices, bonds rallied this week. We have broken out a big, big move here for the bond market. And yields are simply getting crushed. Take a look at yields. So far this week, we are breaking down. This is a bear flag setup. We are breaking down, poised to close down below the lower band of this bear flag setup. I think that we are going lower here. And this is all so far very, very bullish for silver, very, very bullish for gold. Not so much for the dollar, but the dollar is trading on its own merits right now. Tips, Treasury inflation protected securities. A new all-time high this week. So a very, very impressive move here. The only thing that's missing is volume. And I believe the same holds true on the TLT as well, because we want to point out what's good about our positions, what's helping our positions, but what we don't want to do is ignore signals that may hurt our positions, right? So we have the TLT, which, as I mentioned earlier, has broken out, but let's point out it's on very light volume. Okay, so let's just take note of that. We don't want to get lured into a false sense of security. Here's the dollar. We are poised to close above the third standard deviation Bollinger Band on the US dollar. I mean, we tapped it back here in July, but backed off. One trading day left to go. It may still happen. But a very, very rare event for the dollar. The VIX We're up on the week. We're off the highs of the week. RSI is hooking up. Actually, this is a daily chart. Sorry about that. Here's my weekly chart. I knew we had a breakout here. I'm wondering, where's my breakout? Here, we broke out. And yeah, we're off the highs of the week. This makes sense now. I was getting confused. So we have a breakout on our hands. Very bullish price action here. The only caveat is that we are off the highs of the week. Ultimate oscillator, higher lows, good stuff. The Dow transports. Now, here's where things get interesting. The transports closed out the day, again, one trading day left to go, closed out the day above resistance at 11,032. Shockingly bullish. Now, I'll have to do a deep dive to identify whether or not it's the railroads. We did have a good New York, it was the New York Manufacturing Survey, or was the PMI number. It was a good New York regional number that came out today. And that may be why we have a bid under the transports. Let's drill down to a daily chart really quick. Nice day. How was volume? Light, but not that light. So very interesting price action here on the transports. So these are the signals that we look for, right? Now, when you see the transports moving up higher, you have to wonder, why? What's driving that? And I'm going to have to do a little bit more investigation as to the whys behind the rally in the transports, because tech is certainly not doing well. So more to come here in the coming days. The Dow Jones Industrial Average weekly chart, flirting with a breakdown. We were below it earlier today. This lower band of the rising uptrend channel. We did rally back. Here are the small caps. And I mentioned this earlier, that the small caps look very, very good. Now, what will happen frequently is when you have a big rally in the large caps and you're near a top and the large caps begin to roll over, what happens is they take the most heavily shorted names, and those are your small caps, your micro caps, and then they finish off the bull run with the small caps. Because, was it the IWC? What we're seeing here, I'll go to the micro caps in a second. We broke out last week. This week, we've pulled back. Didn't quite do a retest. But we at current have a bullish reversal bar on the week. And we have a new weekly high. That's pretty bullish stuff. Now, as for the IWC, these are your micro caps. Now, not as bullish, but still a bullish week. How's our volume? Oh, this explains it. Horrible volume. Let's go back to the IWM. Very poor volume. So it looks as though, like I said earlier, they're squeezing the shorts, they're driving the small caps, the micro caps up higher. These are your, not all of them, I don't want to paint with a broad brush here, but many of these are your junk stocks, easily shorted, heavily shorted, easily squeezed. The S&P 500 weekly chart. Now, You know, as much as I want to speak my book, because we do have short positions on right now, I would love to say that this is a bearish chart. It's not. You know, are there bearish things on the chart? Yes. I don't like RSI. We're putting in lower highs here. But on price, which matters most, price and volume, we'll check out volume in a moment. We broke out last week. This week, pulled back, did a retest. We're holding support. Volume is very light this week. MACD extremely extended. We're losing momentum on these histogram bars. Stokes continue to rise. So the S&P 500 has its issues, but we're holding a breakout here. So that's why I don't want to go short in the S&P 500 yet. Now, the banks, they're holding up shockingly well. Because remember, yields are breaking down in a very big way. Yet, the banks are holding their gains. I mean, so far this week, while yes, we're down, this is a doji star formation. I'm not going to be the least bit surprised to see the banks move up higher here. Volume these past couple of weeks, very light. So would I go buying the banks right now? No, I would need to see a resolution here. We had a breakout. Let's annotate this. Why do I have 3 of these up here? I'm a stock chart junkie. I have issues. Okay, let's update this. All right, so hey, Bill, you're in Zurich, huh? Good for you. How's the weather there? Bill, do you have any symbols you want me to go over tonight? If you do, please just pop them in there and I'll go over them for you. That goes for everybody. All right, so the banks are struggling here. Really, no snow this year. Wow. You know, it's been very warm here in New York as well. Yeah, right. You see the price action today on that gas? Amazing, huh? What a reversal. I'm going to go over that chart. I'm glad you mentioned that. That was wild price action today. All right, so the banks are flirting with a breakout here. A lot of resistance up here at the 31, 38 mark. So I would not be a buyer, especially if yields close down. Remember, these banks, especially the money, not the money center banks, the regional banks, rely heavily on NIM, net interest margins, loans. And when you have yields pulling back and breaking down, that's a problem for the banks, a major problem. So the banks, excuse me, my voice is going. The banks are going to have a problem breaking out here. They have had a problem breaking out here, but they're holding up fairly well. Let's take a look at the DPST, the regional banks. I would bet they're not holding up as well, although home construction, building permits, doing well. And we're up this week on the regionals. So there may be opportunity here. We'll just need to watch building permits. It's a forward-looking indicator. And the weather here in New York has been very, very warm. Warm over in Zurich, so probably a lot of home construction getting pulled forward. Looking at technology, this is where I think that the Achilles heel of this market is. You have supply chain damage that is just gone amok. You have deaths rising over in Japan. I think they had the first 2 deaths, from what I understand, what I've read, which is limited. They're not managing the contagion all that well over in Japan. They're a major manufacturer. Obviously, China has serious issues, ongoing issues. As a matter of fact, Foxconn came out today. They guided lower. So not good. So the technology sector is still holding in there. We're only down not even 0.25% on the week. But we are putting in lower highs in RSI. Volume is fairly light on the week. I mean, there is no panic out there. I want to go to the daily chart of both the XLK and the semis. I want to see how volume was today. Lower highs on ADX green, higher low in red. That's not good. For longs anyway. MACD histogram losing momentum. Let's check out a daily chart. All right, so we have a break here. This is a serious problem. So we were in a rising, ascending wedge formation. The resolution, not shocking, to the downside. In fact, we broke down here on the 18th. Rallied back, attempted to recapture prior support, no bueno, and we broke today. We don't have a confirmation breakdown. An intraday confirmation breakdown, but it didn't close there. Once we begin to trade down below, let's call it 100.26 on the XLK, and we close there, that's a major problem. Hey, Terrence. Welcome. 4 charts. FDX, okay. Yeah, I'll be interested in FDX. I don't know if you caught the transport charts I went over. Looking really good, the transports this week. Home Depot, good. DBX. And NG was the 4th, Bill? Terrence, welcome aboard again. If you have any symbols, let me know. We'll go over them for you. All right, so here's the semis. They're down a little bit more on a weekly basis than the XLK. No new weekly high this week. This is a mess. Looks like we're double topping out on MACD. We're flatlined on histogram. Let's go to the daily chart. Very similar to the XLK. Volume was not that bad. It was about average today. But I think that this is one tired sector. So we have lower highs, we have a bearish divergence on RSI relative to price. So the market's been sending us a signal for a while that the semis are weakening. I think we're going to break. I wouldn't short on the hope that we break, but I think we're going to break, just an opinion. Not a directional call yet. But again, if we close down below, just like with the XLK, we close down below this lower band of support here, it's probably going to be all over for a while for the semis. Biotechs, I'm looking for some strength here. We have some this week. We have broken out. We have a little bit of resistance above. I hate this volume. I'm looking for sector rotation. If we were up on volume, I would consider that perhaps we're seeing some sector rotation into the biotechs. And I'll probably look to sell puts on LABU, just generate some cash flow. Daily chart's looking really good here, despite the fact we were down today. We closed well off the highs of the lows of the day. Volume rose. Let's keep an eye on LABU. All right, let's see what else we got here. Emerging markets. I've been warning about emerging markets because you have the stronger U.S. dollar, and it looks like we have a threat to the lower band of what I believe to be a bear flag setup on the EDC, emerging markets. Remember, 20% of the EDC is mainland China. So I am not confident that we are going to hold support here. Now, other plays that are interesting are plays like the DPST. That's a pure play on commodities. I'm sorry. BRZU is a symbol. BRZU. Oh, it broke today. Reversed today. It was looking good. All right, scratch that one. See how, I think it's IWC, which is Canada. No, that's the microcaps. Canada was looking good. I'll remember it in a little while. Energy. Another potential bear flag setup here. A lot of topping action. I'm concerned that we break to the downside, even though oil is looking really good. Daily chart, the XLE. Attempted a breakout today, but was rejected. So this is a watch right now, the XLE. I wouldn't short them, but if we begin to break this lower band of support and close there, it's probably going to be a short. All right, gold. Let's go high level here and revisit why we're involved with this trade. So we were down earlier in the month, and we have now flashed a bullish reversal bar. Hey, Rich, you got it, buddy. A bullish reversal bar on the month, assuming that we close here or better. Our stochastics are looking really good. RSI looking really good. We're right at resistance. You can see this resistance level here at around 1608. Where do we close out the day? 1620. So we're right there. We're breaking out here marginally. Volume could be better. Let's go to a daily chart. Now on a daily chart, we're extended. So I think that we're going to get a pullback. Volume has been good past couple of days. This is not, you can't expect anything to hold this type of trajectory. So we're going to have to get a pullback, watch for a higher low, and then we'll look to add more to our gold mining trade. And for those looking to buy gold, that'll be a good opportunity to get in. But I think that we are at the precipice of making a run at all-time highs this year. That's a bold statement because we're still a few hundred dollars an ounce away, but I think that's where we're going. As to let's go to positions last. We'll go over some stock chart requests. Bill, FDX, talking about gold. Is there a reason why you focus on NUGT, GDX, and not the juniors? Not really. You know what it is? To me, you know, they may trade, you know, a few percentage points different, but for the most part, the charts are the same, right? It's just there's no reason whatsoever. I'm not discriminating against the juniors whatsoever. They're more volatile than the GDX is. So, you know, when it comes to volatility, I'm in the NUGT. You don't get much more volatile than that. So I'm good with that. I'm good with that. It's just what I'm comfortable with. So, JNUG, I really don't even think about it all that much. You know, we all have our volatility limits, and I think NUGT is mine. I mean, JNUG is looking really, really good. I believe I have it saved here. It's not that I never go over it. Where is it? Maybe it's one of my other lists. I have a half dozen other lists. But I have gone over it in the past. But 6 of one, half dozen of the other. I think that we are poised for a continuation move higher. There's nothing not to like here. So to answer your question, Bill, it's just my comfort level. That's long story short. Volume's a little bit light. Always happens. Okay, sorry folks. I just hate seeing that red lettering on my charts. OCD. Okay. So hopefully I answered your question, Bill. All right, let's go to we'll go to our positions a little bit later. So Nat Gas. You know, for Nat Gas, I want to go to Thinkorswim. E-minis are dropping here. After hours. No worries, Bill. Here's a chart of Bill, what do they have? A positive inventories report this morning? I know that it came out 10:30 this morning Eastern Standard Time. I have to assume that they did because the reaction was just massive. Look at that spike. That's a huge move. So here's a 15-minute chart. And I was looking at it here. I saw the bullish reversal bar, and I figured, you know, I'll watch it, and if it closes above the support level, maybe I'll look to re-enter the UGAZ trade, which we got stopped out of last week. And thank goodness, you know, the rule of wait until the last hour of trade, it paid off today because we would have gotten hammered. Because I saw this bullish reversal bar, and I figured it was overbought. They sold it off. It's holding support, but I waited. So let's go to a daily chart here and see what the future brings for nat gas. Go with the UNG. Yeah, here's that round trip. It's a bad day for longs. Let's go monthly view first. All right, so right off the bat, nat gas was firming up last week, and I said that, you know, we entered the UGAZ trade. It was speculative because despite the fact that we were showing strength on a 4-hour basis, the trend is still clearly down and had not been resolved. Last month, we broke critical support. It had acted as long-term support. Frankly, I think that we're probably going to head lower here. This is a major breakdown. The Stokes look good. They're trying to hook back up, but that means nothing. I mean, look at it from back here. They were oversold for around a year, and the share price just continues to drop. Daily chart, a weekly chart. Bearish reversal bar on the week. Can't buy it. I wouldn't short it, but I wouldn't buy it. Here's the daily chart. You know, maybe they'll try to fill the gap here and hold it at around 1456. I would have to say avoid right now. I just don't see a trade here. A lot of damage today. It was a slight beat. Not good. The inventories report. And then they lowered the boom. Yeah. Probably because of the weather, like you said earlier. Yeah, absolutely. Absolutely. And they're using these LNG tankers as storage facilities now. They're just floating around out there. 180 is your price point. That's a big drop. All right. Okay. All right. Let's move on. FDX. This should be interesting. We have a breakout, monthly breakout, assuming that we close there. Same deal here. On RSI, we have higher lows, higher highs. Stokes hooking up. Let's go to a weekly chart. Yeah, we're moving. All right, good. So that's gone now. All right, so I'm looking for a breakout here, Bill. We may be slightly above it already. Let's drill in here. Yeah, we are. We're slightly above resistance at current. So I'd be watching to see if we close out the week where we closed today or better. And then look for that retest. I'm pretty sure you'll get a retest next week of the breakout point. Then I would look to open a position if that's what you're looking to do, and just keep a stop if we drop back down into this trading range. RSI is looking really good, higher lows and higher highs. FedEx is looking good on a weekly basis, on a monthly basis, daily chart. All right, so I overlaid weekly resistance. We're right there again. As we know, we're right above, slightly above it. If we do begin to rally, start looking for resistance up here at this rising upper band of resistance, which is at current around 169.76. Let me print this off for you. Just in case you want it. So I like FedEx. And I opened up with the 4-hour chart, and I could have sworn that was looking good as well. Yeah, we're breaking out. This is the weekly overlay here. You can see clearly on a 4-hour basis, we're above it. Looks good. What else we got? Barone, hey, good to see you. No worries, man. My thoughts on the market in general. Had I not taken a look at the charts of the Dow Transports and the small caps, I would have said to you, clearly bearish. But I'm going to caveat that now. And you can check out the replay so I don't bore everybody with repeating myself, because I went over those charts for you. I'm bearish on tech, in particular the semis, anything tech related, because I think the supply chain disruption is going to wreak havoc for a while on that sector. But for whatever reason, the transports are moving up higher. The small caps to a lesser extent, not shocking. Normally, when you get near an end of a bull run, you see the large caps peter out a little bit, and then what they do is to finish off the bull market is that they rally the most heavily shorted names, which are your small caps, and they juice them, they send them up higher, keeps the small guy excited, buying stocks. All the while, you're seeing market breadth rolling over. You know, were it not for the triple Q names, especially the Facebook, Amazon, Netflix, Googles, and Apple, this market would be rolling over already. But those names are keeping the market aloft. But for whatever reason, the transports are holding in there. And FedEx, clearly a transport. Perhaps it's related to the contagion. I would need to do a little bit more analysis. But overall, I'm satisfied with what we're short of at current and what we're long of. But now I need to take a look at the transport and say, okay, what am I missing here? Because I'm clearly missing something. So a little bit more analysis needs to get done here. Because FedEx is telling us a story along with the other transports. All right, so let's, I'm going to go over NUGT in a moment for you, Barun. We did FedEx. Let's go to HD, Home Depot. Now this is no shock, and I think it's probably going to continue here. As long as the S&P 500, which happens to be showing pretty good resilience, major league breakout here, a monster breakout this month. That was a horrible, horrible annotation. All right, we're confirming the breakout with rising RSI. That's good. We do have resistance above here, right at 248.77. Where do we close? We're just shy of it right now. So keep that in mind. It's extrapolated out. Rising upper band of resistance is right above. Weekly chart. Let's overlay the monthly, keeping that resistance level on the map. And there it is. This is an ascending wedge formation on Home Depot. So while, yeah, there's more upside to go here, I'll be more concerned about being currently long and perhaps looking to book some profits into resistance, especially in a market environment where we're getting a little bit iffy. We're going to keep the monthly overlay up, again, to keep it on the map. Indicators look good here. Beautiful day today. Outside reversal bar. So I think that we're clearly going higher. The question is, will this act as resistance right at the 249, 250 mark? So would I initiate a new trade? Probably not. Not enough reward for the risk. But if you're long, I would just raise stops. We're probably going to go right into it. This is a beautiful outside reversal bar. I think we're going to head up higher tomorrow. Assuming, of course, the market holds in there. 4-hour chart, beautiful. We had a nice consolidation, breakout. Looks like we're going higher on Home Depot. I like it, but just remember that resistance above. What else we got? DBX. Dropbox. Never went over this one. This is a first. No shock, not a lot of data. But on a monthly chart, yes, there's not a lot of data, but the data that we have is telling. This is horribly drawn, but you get my drift. We broke out this month. Weekly chart. We have resistance above. This is a 20-period moving average. We became overbought, rallying into the third standard deviation Bollinger Band, backed off, no shock there. Can't blame it. The 20-period moving average is a natural resistance level. However, it's flattening out. I don't think it's a great big deal. Nice consolidation here. Really nice. RSI rising. Big move today. In Fuego. All right, so I'm sure you knew my response to this before you asked the question about Dropbox. That I couldn't touch it right now, but the macro, that's the micro view. the macro view is that I think it's going higher. It's just got to take this froth off here a little bit, and then it's probably going to go higher. 4-hour chart. What you're seeing here on a 4-hour basis is what you want to see on a daily basis, right? We've got frothy back here, and it handled it really well. It pulled back and retested the support level, rallied, consolidated, flirted with resistance. Let's clean this up, take some noise off of here. Let's go with a daily overlay. I think that if we close above $19 per share, we're going up here. Not that far. We're using a 4-hour chart. We're going up to $19.50 pretty much in a heartbeat. But I'd like to see a sideways consolidation on a daily basis. And then a move higher. So I would just watch this one. If you're long, I would stay long. I wouldn't sell it right now, me personally. And I would look to add on a continuation breakout. It's a nice chart. I like it. What else do we have? Richard, INSG. Yeah, we've flirted with this one for a while. What a reversal week. A month, I should say. This is a monthly chart. Man, you see a reversal bar like this and you're like, this has got to drop. This is a picture of strength. Incredible. All right, so the only caveat I have, actually two concerns about the monthly chart are, and I know it's going to sound a bit petty, given the fact that we've reversed the losses of last month. However, we have yet to put in a new monthly high. I need to say it. And we are flirting with that third standard deviation Bollinger Band, which is concerning to me. And given the history of the price action on INSG, it should be concerning to anybody that wants to be involved with it, because it clearly respects that third standard deviation Bollinger Band. Every time we touch it, we back off. So we are very close to it yet again. Doesn't mean it can't move up higher. I think that ultimately we probably will. It may not be this month, and hopefully for a longer rally, a sustained rally, if you're long, you don't want it to do it this month, because automatically it gets overbought, gets sold off, a lot of volatility. You know, I like it just to creep up higher. You know, nice day after day, creeping up higher. And if it opens up, let's say we closed out the month where we're at, or slightly lower on the month, and we open up March sideways. Now you have a lot more room between that third standard deviation Bollinger Band and where we are at current. And then it gives you the opportunity for a nice move up higher. And personally, that's what I think is going to happen here. RSI is looking rock solid. Stoke's a little bit iffy, but they just may be flattening out. I wouldn't trade off of that. Daily chart. Actually, I skipped over the weekly, right? I skipped over the weekly? Yeah, I did. So we're off the highs of the week. I want to see a bare minimum, a close above 8.49. If it doesn't close above 8.49, avoid it. You want to see it hold this support level, because that validates this reversal bar. My annotation tool is not working. Why? All right. Forget that. Anyway, weekly chart, a little bit concerning that we're closing off the highs of the week. No big deal. Monthly chart still looks strong. Needs to hold 8.49 this week. Daily chart. Daily basis, we broke out yesterday above resistance. I drew this several days ago. Today we did a retest. We held. We'll probably get a little bit more consolidation here. And that's fine. That's a good thing. So I like the chart longer term. Assuming, of course, we hold this support level. Again, 8.49. It's got to hold that level. See if the raindrop charts tell us anything here. Yeah, I don't like the close today. Big volume into the close to the downside. Just be careful with this one. Okay. Let's go to a 4-hour chart. Looks good. Looks good. It's holding gains, consolidating. It's doing exactly what you want it to do. Looks like we're going to flatten out here on Stokes, higher lows, RSI. All the indicators implying strength. I like it. 8.49. It's just got to hold that level, and I like it. What else do we have? HD we did, DBX we did. Nat gas we did. All right, so let's go to, I guess we'll leave off with NUGT, the Trip Qs, Bitcoin. These are our positions anyway, and I was going to leave off with them. Oh, Richard, SPY. I'm going to go back for the benefit of Barun anyway to, I'll go over the weekly chart of the SPX, same thing. Where is it? Here we go. All right, so I went over this earlier, but we'll revisit it so people don't have to go scrolling through and finding it on the replay. You know, we have short positions. I want to be very, very bearish. It's just because I have a short position. I want everything to collapse. But we don't speak our book. We have to be honest. And honestly, this is a pretty goddamn good looking chart because we broke out last week above resistance. What do we do this week? We pulled back. We have a doji star formation forming. You know, I want to say short the S&P 500 with everything you got. I can't. I simply can't. Look at this volume. There's no institutional distribution. You know, yeah. Are we extended? Do I hate MACD? Do I think there's momentum waning here? No doubt. Would I go buying the S&P? No. You bet, Bill. Bill, thanks, Bob. You have taught me well to be able to recognize some good charts and take advantage of some nice moves. Much appreciated. I have another question. Sure. Go ahead, Bill. I'm just going to continue on here and I'll answer Bill's question in a second. All right, so weekly chart, rock solid. With the, not rock solid, okay? Solid on price. RSI, I don't like. Lower highs. Stokes, all right, they're okay. Volume. Ace is very good. I'm hating MACD. This is so long in the tooth. Very, very extended on MACD. Daily chart. Now the daily chart's a concern. I didn't go over the daily chart earlier. So we have a bearish divergence on RSI. If we close down below this support level, the lows of the day today, this market's in a lot of trouble. And on a daily basis, while the weekly volume is subdued, daily volume today rose. As a matter of fact, I want to go back and take a look and refresh that weekly chart, because sometimes there's a delay with the indexes on stockcharts.com. It happens with gold. It happens with yields. And it takes maybe an hour or so after the close for them to update. Let me check volume now. No, it's still the same. All right, so I'm concerned about the S&P 500 on a daily basis. I would not be a buy. Would I short right now? No, I wouldn't. I wouldn't buy it. I wouldn't short it yet. Now we have a lower high here on MACD. Momentum is really waning. I would be worried, very, very worried, if I were long. Do you change your options expiration dates? Then just keep them shorter timeline to manage your risk. I have some 40 March calls on Uber. All right, so you're going to have to forgive me. I can't talk about Uber because I have a conflict of interest with the ride share. So I'm going to take your question in general. So I'll use NUGT as an example of how I use options. So when you have, and perhaps you could correlate this to Uber, when you have, the way I use options is that when I'm in a consolidation range, I like to I always believe that my stocks should be throwing off cash flow. I always want money coming in, especially. Yes, understood. So I'm gonna touch upon your comment in a moment, because this is a very, very important point you just brought up. So I'm going to talk about NUGT, but it really doesn't have to do with market volatility, right? So NUGT, for my purposes, and you can assign this to your trades, your positions, right? So I believe that your stocks should be paying you constantly, even when they're in a consolidation range or in a semi correction. They should be throwing you off cash flow. That assumes that they're in an uptrend. Now, I'll stay very, very short term on strike price and on expiration if I am in a consolidation range and I'm expecting a breakout. Why? It's because I want to generate cash flow, so I'll go just out of the money to generate that cash flow. However, I trade leveraged ETFs, so we could blast off at any time. So I don't want to be sitting there with an in-the-money call option and waiting a month for it to expire, or rolling it out a few months out just to avoid having it taken away from me. I hate doing that. Now, with NUGT, this is the first week in, I don't know, months that I haven't sold covered calls. Why? It's because I'm worried about capping my upside here. Think about what we've done so far this week. We've rallied nearly 16% on the week so far. So it's not a wise move to stay very short-term in duration and very close to the money when you have an ETF that's breaking out. You don't want to do that. Now, in the case of market volatility, if you're considering using options for risk management, and you're considering selling covered calls in a market where you have volatility rising, and I've gone over the S&P 500, I've gone over, I'll go over the trip Qs in a moment. I went over the IWM. Let's go daily chart for a moment. Because the IWM is looking bullish. All right, so I don't see any negative divergences here. But on the S&P 500, we are clearly seeing negative divergences. Does that mean that we're going to break tomorrow? No, it could break out. But if you're worried that the market is going to go down because volatility is going up, I would not use a covered call strategy as a risk management tool, because especially in the case of a very volatile stock which you're involved with, the premium that's generated off of that call option that you've sold can be wiped out in a gap down in a heartbeat. Now, what you could do is on whatever trade you're looking at, and again, I'm sorry I can't bring up the chart of your rideshare stock. I have to be very careful. What you could do is sell that covered call, then use the premium to help finance a put, if that makes sense. So you could sell an out of the money call option and take that premium and use it to buy a put option. So you put a floor in under where you could lose money, stay long, and still have some upside potential, if that makes sense. Did I answer your question? And I'll wait for your answer. I'll look for it. I know there's a lag when I speak here. And if you want me to go over another chart to talk about that and what I would do with options, I would certainly love to do that for you. I hope I answered, Bill. I know I could get long-winded. I have a very hard time with being crisp, clear, and concise. You bet, Bill. Yeah, all right. Let's take a look. I know the NASDAQ 100 was slipping earlier. Wow. All right, so here's the line in the sand, folks. There's actually two. And these are the NASDAQ 100, the equivalent of the trip Qs. We'll use the 4-hour chart. We'll go with that. Sorry for the silence. If I was on radio, they'd fire me. Okay. So here's our tripwire. Let's talk about what happened today. And Barun, this speaks to the triple Qs, so it's relevant to your question as well. So we broke support, that tripwire, and then just fell apart. We managed to, after breaking down below critical support, we managed to rally back, but now we are slipping. If we break this tripwire here, which brings together the lows of the day relative to the lows of the after hours session, if we break down to new lower lows, I think we're coming down here to this lower band of support. And if that breaks, if we close down below it, it's Armageddon. You're going to see computerized selling in a very, very big way. We haven't done it yet. We're holding support at current. This is not a pretty chart. As far as I'm concerned, we don't want to be alarmist here. We would just want to be rational and just say, you know what? As far as I'm concerned, we are in a trading range, but unfortunately, we broke out of that trading range and we flashed a breakout point failure. We know from history that we will retrace all the way back down to a lower band of support. We checked that box today. But many times, we break that support level to the downside. So this is not looking good. We'll revisit this before we sign off. The Russell, not that bad. Where's the S&P? Same holds true here. There's our tripwire. We break this support level, and there's a huge vortex that opens up here, a huge black hole. Because remember, this rally has not been on a dramatic amount of volume. It's all been computerized trade. They just keep sending small orders, hitting the ask, and sending this market up higher. All right. Let's go to, we'll revisit this before we sign off. We'll go to, yeah, sure. Daily or weekly? Which do you want, Ron? Bill, talking options for a second. Let's say you bought in the money calls, okay, on something that has been showing a good move. Market volatility changes its direction. Say strike price a month out. Get out. I never, ever, ever, ever own front month options. No. If you're seeing a directional change, if you're long, my attitude with options is this, is that unless, of course, you're like with Amazon, We bought what was it? We bought August strikes, 2000 August expiration, 2000 strikes. I want a lot of time on that trade because it gives me time to be wrong, like I was. It shot up 25 points yesterday on me, but today we got it back. But I had time. I didn't panic. I knew I was confident with my directional call on the markets, but that time allowed me to sleep. I didn't lose a wink of sleep last night. Now, when I'm dealing with a stock, going back to Amazon, why I brought it up, it's a big dollar stock, right? So I want to use options because they're very, very liquid, highly liquid. I can get out, no problem, and it just makes financial sense. And with the time, I went out to August. There's really no time decay right now, very minute. So I'm not worried about a time decay at current. Now, that's one reason why I would use options, buying the options. Normally I sell them. Now, with regards to buying front month contracts, there needs to be a very, very good reason. One might be that I'm looking to hedge a position, right? So taking case like with NUGT. As a matter of fact, I'll show you what we did. NUGT, here we go. All right, so our strategy, one of them back here, we were long this entire run up on NUGT back in 2016. And as we rallied up and into the third standard deviation Bollinger Band, I would sell out of the money calls and buy put options. So I'm locked in. Those put options were front month. I didn't go way out of the money on the option. I mean, I didn't go way out on the time frame on the put options. I was just looking for protection. That's it. So that's one reason why I would buy a put option or buy an option that's front month. But I'm using a call option to finance it, so it's not really coming out of my pocket. Maybe some of it is, but not all of it. Now, the only other reason why I would buy an option that's front month, and it's rare that I would even do that, is when I have an extreme oversold stock or an extreme overbought stock. That gives me an edge over other traders. They're not willing to pay up. I'm going to take advantage of the lack of implied volatility. So I'll buy up those options betting that I'm going to get a short squeeze and that bet will pay off. So it's very little risk, a lot of reward, because nobody else is looking at that trade, because either everybody's very, very bullish or they're very, very bearish and they're not thinking the way I am thinking. So I need to have an edge. So if you're worried about a directional change on your trade, then I wouldn't roll that position. I would exit, because all you're doing is you're compounding a growing problem. So I would just cut losses, move to the sidelines. You bet, Bill. Yeah, I use weeklies on the leveraged ETFs because, again, I don't want to cap my upside potential. I'm just looking to take advantage of weekly time decay and not having to go far out in time, 30 days out. It drives me crazy waiting that long. But sometimes you have to. When you're in a big bull run, then you sell 30 days out. You get paid nice big fat premiums for holding the position. So then I'll use call options later out in the time frame when we have a stock that's just on a tear, and I just wanted to bring in more cash flow. All right, Ron, you didn't get back to me the screenshots of SPX. I'll give you the links. All right, so this is the daily. SPX. Here is the weekly. Yep, that's right. SPX. And the trip Qs. All right. Now we're going to segue over and into positions. Let's go to a weekly view of the trip Qs, and I'll send the link down there into the chat box. Bing. Okay, so where to begin here? Let's just start from the top. Lower high on RSI. It's overbought, 81.09. Stokes, lower highs, but that's somewhat resolving with the fast line this week, and we're putting in lower lows. Price, still good. We have a new weekly high. Here's where it gets really scary, is volume. Volume is just non-existent. MACD histogram. We've made a new weekly high on no volume, and it's being made clear in momentum that we're beginning to lose momentum. That's why we've been building our short position on the trip Qs. Ultimate oscillator, lower highs. We are historically very extended beyond the 50-period moving average. So in short, a lot of money has been getting pumped into the triple Q names to drive the market up higher. And it's inefficient. This is not supposed to be where it is right now. And it's the reason why we've been leaning into the short side. If we do begin to break here, let's go to a daily chart. As a matter of fact, before I do that, if we do begin to break, let's go to the daily. Daily chart's bad. So today, it retested support and it held. If we consolidate sideways here and you have a good healthy consolidation, I could be proven wrong. And the shares may head up higher. I think that we're extended. The signals by the market, we have lower RSI. RSI is now rolling over. Stokes beginning to roll over. Price clearly broke a bit today, and it did so on volume. We had a distribution day on volume. ADX green has just been sending signals for a while now. Weak. MACD, weak. So I think that we're poised for a correction here on the Qs. I must believe that because I've been buying the short ETF. Let's go to a 4-hour chart. Hey, Norris. When volume is low as a mom and pop, the main buyers. Yes, but also it's also a signal of shorts getting squeezed. So you have a pool of shorts, they're just getting taken out to the woodshed and shot, and that's what sends the shares higher. So that's probably why you're seeing the small caps get bid up now. Is that they're squeezing the shorts, they're trying to give the illusion of a rally. So yeah, usually it's mom and pop, but also shorts getting squeezed. Now, on a 4-hour basis today, here's where things get truly ugly. And we already went over this on Thinkorswim with the real-time charts. Is that we broke down today below critical support. And what we'll be looking for is a break of this support level. If it breaks, look out below. Good volume into the close. So we broke support. They attempted to recapture in the back half of the day, and they failed. Stokes rolling over, RSI clearly rolling over. So we're going to remain short here, and we'll look to add on a break. Ideally on a weekly basis, I'd like to see a break before I added more. Amazon, make sure I'm not missing anything. No symbols, good, okay. Amazon. Our weekly chart of Amazon. No new weekly high. Very extended here relative to the third standard deviation Bollinger Band, and very extended relative to its rising 50-period moving average. And I find it absolutely shocking that this coronavirus has had minimal impact on the shares of Amazon. Think about all the goods, supply chain disruption that they're going to have to feel. And granted, yes, they don't sell, they don't warehouse these goods on their own books. They have what do you call it? FBN. Anyway, they warehouse the goods for other sellers, but they do take a transaction cut from those other sellers, and that's where they're going to get hit if they get a supply chain disruption. And how they're not going to feel one is just absolutely mind-boggling. It's shocking. So the weekly chart, very extended. The technicals are in alignment. The fact that the market's ignoring this headline risk and the technicals are just so extended, it's just like an opportunity of a lifetime to short these shares. Daily chart. Now, there was a point in time today, believe me, I was thinking about covering, booking profits. I said, you know what? Let's roll the dice here. When do things get really ugly for Amazon? A close below 21.20. Down volume. I didn't realize this until now. Down volume is horrible today. That doesn't give me the warm and fuzzies. But I'm still confident. Lower highs, ultimate oscillator. I mean, this is a basket case. So I think that we will break here on Amazon. The last chart is USLV. Sorry, folks, wrong chart list. Getting tired. Weekly. All right, so this is just beautiful. Beautiful. Breakout. Higher lows. Breakout. Volume a bit of a concern. Higher lows. Higher lows. Rock solid. And we're up about 11.25% this week on the trade. Now here's beauty. Here's a breakout yesterday, a pullback and a retest today. I think we're moving up higher. We're probably going to be buying more tomorrow, assuming that we hold support. Normally when these Stokes get extended like this, like back here, you'll get a rollover. That may happen. But as long as we hold the support level, I'll be happy. And that's going to happen. So I'd like to see it happen sooner rather than later. So we may bounce another day off of the support level. Then watch for a hook back up on Stokes. Let's leave off with NUGT. I forgot about NUGT. All right, we'll go weekly again for those folks who just joined. All right, so we have our weekly breakout. We're up about a little over 15.5% on the week. Again, what's not to like here? Higher lows, breakout on RSI, Stokes, higher lows, no breakout yet. We have a breakout on price. Forget it. Volume's going to be a little bit light. We recaptured or are poised to recapture support on Ultimate Oscillator. ADX going in the right direction. Green anyway. Weekly chart looking good. Daily chart. Almost a spinning top formation today. A lot of volatility today. Let's just say we closed at support. Volume rose to the downside. MACD okay. The same thing may happen here with NUGT as what we saw with silver, where overbought, and just like what happened back here in June, we may pull back and then expect a hook up. And that's okay. It's part of the process. So NUGT still looking good here. And with that, folks, I'm going to say goodnight. You know what? Let's first do a check, because I'm going to do it anyway. So I'll keep you guys on for a moment if you want to stick around. Take a look at the futures action. I want to check out gold. And we'll leave off with the NASDAQ 100. Gold up. All right, let's leave off with the NASDAQ 100. And where are you? That's not the one I want. Good night, Bill. All right. Well, I don't want to keep everybody on here. We rallied it back a little bit. It's a lot of time between now and the open tomorrow morning. We'll see what happens. Everybody have a great night. I'll talk to you tomorrow. Be well. Take care, Barun. Oh, Bitcoin. I saw you. Hold on. Don't go anywhere. Bitcoin. Glad you reminded me. All right, so I have good news. I think what we're seeing here is simple. We're going to do a retest of 9,000. Where are we now? We have a little bit further to drop down here. But I think we're going to do a retest. Volume this week is pretty light. Excuse me. Daily chart. Yeah, this is not pretty. I'm long Bruin, and I would like to see a retest of 9,000. And what if I'm wrong? What if we don't go down there and we begin to rally? When would I buy? First off, these stocks can't be moving downward. Secondly, I'd be looking at this upper band of resistance. That would bring me over at current around 10,100 per coin. But if we break support here at 94.02, we're coming down here, 9,000. That is weekly breakout. And that would be a great entry point. And it could happen pretty quickly. Those are my thoughts. No worries, Bruno. All right. Have a great night, and I will talk to you tomorrow. Be well.